of you that are new to the call is live streamed on Facebook, YouTube, and LinkedIn. So there are a bunch of people that are not on the Zoom right now. They're watching on social media or they're watching online. There was a question asked, are these calls recorded? Yes, they are. And we had a great suggestion. I keep giving him a call out. Kevin Lechko, loan officer in Philadelphia, asked if we could turn all these into podcasts for audio because he liked listening to the old ones when he was working out. So you can go to the Big Joel Show, any place you consume podcasts, Spotify, iHeartRadio, Apple, it's on YouTube, and any place you grab podcasts, you can find these. And this call started right at the beginning, in the middle of COVID, which I can't believe is going to be 3 years from now, pretty soon. So the calls go all the way back to then, if you want to listen to them. And my regular podcasts are in there as well. So as far as housekeeping goes, if you have a question, go ahead and put it in the chat. Josh, who works with me, is on here, and he will monitor that. I like to keep these calls to a swift 30 minutes because typically the guest I have is a top producing guest, and they're busy, and I really appreciate getting some of their time. So again, this is the Big Joel Community Call. Welcome, everyone. We are going to get started right now. So welcome. Before we started, Andrew Marquis, who's my special guest today, who I'll introduce in a minute, asked me in a very funny way, Joel, what's going on with this market? Which people ask me all the time. And I have to tell you, I'm hearing this from a lot of loan officers and from real estate agents. If you look at how long people have been in the business in general, loan officers and real estate agents, most loan officers and real estate agents have really never seen the rates go up in any significant way. Andrew and I were laughing earlier about the 2-1 buy down, this revolutionary thing, the 2-1 buy down. The funniest thing ever, the first loan I ever wrote was a 2-1 buy down, 14% note rate. It was 12, 13, 14, and you qualified at 12%. Back then you could qualify at the bought down rate, but you had to do it because the 30-year fixed rates were so high. And it's amazing that we're back there, but the rates really aren't historically high. And we just saw a tiny little drop down. People ask me all the time, and I'm going to ask Andrew about this as well, overcoming the objections of people wanting to wait. And I will tell you, I am a firm believer, and you can send this to your agent partners, that waiting is going to be problematic for most buyers sitting on the sidelines waiting, because these rates dip into the fives consistently, which I think they're going to. It is going to reinvigorate the market. And suddenly these houses that are technically going under are right back to going the same or over. And we're back in the same situation we had, because let's face it, inventory, yes, it's better. There's a lot of more houses on the market. But everyone, if you didn't know this, there are still 4 million people that want to buy houses, literally. 4 million people that want to buy houses out there. So they're out there. They want to buy them. If they're there and they can afford them, they're going to buy them. So, the demand is really, really, really there. Yes, we're in the holiday season right now, but I don't even know if it's a normal holiday season. A lot of the loan officers I work with one-on-one, I'm hearing across the board are having very big Decembers. They weren't necessarily happy about November, but boy, they're having big Decembers, and their Januaries are filling in as well. So today, my special guest is Andrew Marquis. Andrew, I think you're probably a senior vice president or your chief cook and bottle washer at Cross Country Mortgage in Boston Metro. Andrew, if you guys look at the Scotsman's Guide, is a perennial top 10 guy. A couple of years ago, I think he might have cracked the top 5, might have been number 4 in the country. I've known Andrew for a long time, and have been fortunate to watch his rise. And Andrew's rise, by the way, does not come through any smoke and mirrors. Andrew's rise comes just purely through hard work, because he's a very hard worker, and he's also an extremely smart worker. He works hard and he works smart. But Andrew is a purchase guy. Of course, he did tons and tons of refinances, like all good loan officers do, because they don't want their clients going elsewhere. But the reality of it is Andrew's business is based on referrals from real estate agents. That's how he rolls. So he is a very Joel mono match guest for you all that are used to being on this call. His primary job every day is deepening existing relationships with agent partners and developing new ones so he can take more market share there. So Andrew with Boston. Andrew, when did you get in the business? What year?
2003.
2003.
Yep.
So Andrew got to see the meteoric crash. But Andrew also knows this looks nothing like 2003. So, and Andrew, I'd love to hear, if you don't mind, for people, when agents come up with that objection, when they give you the wah-wah, the 2007 wah-wah, you were actually around. What do you typically say to them? Why do you say no, 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 no? Relax a minute. This is nothing like 2007. I'd love to hear how you overcome that.
Yeah, so I think what you hit the nail on the head, Joel, is I think right now we're in a standoff in the market, right? And rates have gone up. Values haven't come down enough to make up for the rate difference. So you have a lot of sellers that are saying, I'm not going to sell. Buyers saying, I'm not going to buy. And I think the people that are sneaking through are the FHAs, the VAs, the 2-1 buy downs. I did an FHA 2-1 buy down today with a $25,000 seller credit. And I think that's the business that's happening. But that little rate drop that we all think we're going to see, and I tend to agree with you, is probably going to open the floodgates again, right? And then all those FHAs or low down payment people that had a chance, that chance is going to evaporate very, very quickly. And I think that values could go back up. Whether that's 6 months from now, a year from now, I think it eventually will happen, all pending the inflation data. But to answer your question, the market now, we have no inventory. We have generally a strong economy, a strong job market as well. And we don't have poor credit loans. So we don't have a whole bucket of poor loans that were written over the last 2 or 3 years, subprime. And so the market is really very stable. It's just interest rates are high to calm inflation. And that's really the main thing we're working against right now. But all those other factors that contributed to the default, 15 years ago are really not there.
Yeah, I mean, none of them are there. And I tell these guys all the time, if you've never heard the term 80-20 LIDOC, feel free to Google that. That's a loan where you literally showed up and lied about your income, put zero down, and waltzed into a house. And you usually did it with what's known as a 228, which means your rate was fixed for 2 years, and then it hopped up 9 zillion% for the other 28, which is when every single person threw their keys on the ground, stripped all the brass out of their house, and took a walk immediately because they literally had nothing in the deal. We look nothing like that right now, because if you look at the lending that was done over the past, call it 3 years, 4 years, we have no programs like that. The only thing, Andrew, that I found super interesting, which the market's backed off on, is how aggressive the market became on second homes and investment properties. It was very aggressive for a time. I love when I hear loan officers complaining about price overlays on second homes and investment properties. I just laugh at them. I'm like, guys, ladies, you don't understand. This is how it always was. What you just saw was abnormal, because when you get in trouble, when a consumer gets in trouble, the first thing they get rid of is their investment property. The second thing is their second home. And the third thing is their primary, which they never give up. So if you look at risk from an actuarial standpoint, the riskiest loan for a lender is an investment property. I don't care if it's in the middle of, Airbnb Central and it's going to, net 15 grand a month and your payments for, it doesn't matter. That's still the property you dish first when you have a problem. And I think, Andrew, if anything, that's the only thing that was mildly risky, but you had to qualify for those loans. And furthermore, most of those are in places where even if someone is really using it half the time, they could just rent it and cover. Like I'm not seeing. The other thing I love when the agent, we're going to have a spate of foreclosures. And I say to the agents, listen, what you're missing is foreclosures have been frozen during COVID. So these foreclosures are from 2020, 2021. These are not foreclosures because the rates went up. These are foreclosures for people that would have been foreclosed on anyway. There's nothing to do with COVID. It has to do with the fact that somebody died or they can't pay their bills or something bad happened. But we've frozen. It's been frozen in time, and states and jurisdictions, are loosening that up. So these servicers can go get those people. And even then, by the way, those of you newer to this that have never seen an REO market before, servicers never want to take the house back if they can help it. Believe me, it's a loser every time. It's the last thing they want to do. So they have gotten very adept at working stuff out as well. So Andrew, tell me, number one, talk to me a little bit about your agents. When your agents are just losing it, when you got to put them on the couch and get out your pipe and, and be the psychiatrist. How much of that are you doing right now? Do you find you're spending a lot of extra time doing that? Talk to us about that. I'm hearing this from loan officers all the time, the counseling factor with their agent partners.
Yeah. So the big one there, Joel, is, everyone used the word opportunity. And the way I speak to realtors, I say, look, the last 2 years, we were writing 10 pre-approvals a day. Every day we were doing 10. How many of those offers were actually getting accepted? 1 out of 20. Okay. So now we're only writing 4, and I explain this to my team as well. But when those offers get submitted, if you have a buyer that wants to buy with the interest rates the way they are, they have a program right now, and there's a property, they're going to get the offer accepted, Joel, more than half the time. So even though we're only writing 4 pre-approvals and it feels it's so dead, you're getting 3 out of 4 accepted versus 1 out of 10. So, I just tell the realtors, like, this realtor wrote a crazy offer. So it was Wednesday before Thanksgiving. She offered a seller 11 grand over the asking price, but she asked for a $25,000 closing cost credit. She's going to buy the rate down with a point and then do a 2-1 buy down on top of it. And it's a 90-day close because she can't qualify until she files for 2022. So she said to me, I go, this is a crazy offer. And she goes, Andrew, if my buyer wanted to write this offer for him, I would not write it. And she goes, but it's her buying the house. So she wrote it and the guy accepted it. So it's that's the kind of the pitch is like, hey, there's a lot of people that still want to buy. Let's get them in a house that's affordable, go over the rates the way they are, and get them moving.
And let me tell you, as someone that's been around for a while, I can tell you there are a lot of loan officers that don't know what they're doing, still hanging around in the market. They've lost their staff. Their LOAs have been laid off. And now these loan officers are originating loans backwards, sideways, upside down. Who knows how they're doing it? They're getting bombed by an underwriter. This is a pro loan officer market share taking market. Okay. If Andrew Marquis grabs one of your loans because you blew it up, because you didn't know how to put it together, he'll be in front of your agent partner within 5 days minimum. Okay, so everyone on this call should be doing the same thing. This is a market share taking market. This is you should be taking, you should be growing, not just hanging on right now. And the number one way to ensure that is to know your craft. You just heard Andrew very quickly wail through a complicated, crazed offer that there's no way would have ever been written without him walking everyone through to show them, okay, this is how we're going to do this. Believe me, that agent didn't come up with that on their own. Okay, they came up with it because Andrew said, do this, or this is what we're going to do, or if you do this, I can do that. If you don't really feel like you know what you're doing right now, if you cannot pre-qualify someone on a napkin with a pen and a calculator, you need to make sure you know how to do that. Okay, because that's the kind of market we're in. You can shine in that market. The agents that I work with are shedding those loan officers that were hanging around bringing bottled waters and donuts and things like that would pick up a loan here and there. Those loan officers are getting shut out all over the place. The agents are telling me they're doing this. They have no time for those bodies. They need pro loan officers that know what they're doing. To quote what Andrew just said, there's less deals. They all need to close. We're not just throwing them at the wall, seeing if it will stick. Andrew, for people on this call that had big years last year and big years the year before that are I don't want to say dismayed, but are looking, and they were closing 10 loans a month and now they're closing 3. Okay. What are some core activities that you do every day? And I love asking people this question, everyone, because Andrew probably doesn't have to do some of these core activities. I know he does them anyway. What are some of your core activities that you are doing every day to keep growing your business and to not stop? Because I know you're not a hang-on guy. Neither am I. I don't want to hang on. I want to take market share and crush the competition. Give these guys a couple of things, and ladies, that you just every day you're doing right now.
Yeah, so it's all about retention and growth of referral partners, Joel. And so like last week, I took a new realtor group out to dinner, just went over like how we could get more business from them, how we could help them grow their business. And I would say the big thing right now is come with value, come with strategic ideas, scenarios, options to help the agents sell more real estate, because they're just as down as we are right now, Joel. It's not just the loan officer that's hurting. The real estate partners are hurting just as bad, if not worse. And so if you can come out there with strategies for them of how they can tangibly grow their business and do more deals in this kind of an environment, you know, I think realtors, they get nervous about the rate. They think rates are 7 to 8. And I say to realtors, I'm not doing loans at 7 to 8. My rates are 5 to 6, right? Now, a lot of times we're charging a point, or we're doing a buy down, Joel, or we're doing some sort of, you know, scenario, but they're nervous. And until you say to them, like, I mean, like that $25,000 closing cost credit, the more I think about it, we're going to have to cut that credit down because it's over the 6% that FHA even allows.
Right.
So I think on that deal, they allow like 24,000 and change, and we're at 25. So come PNS, we're going to have to cut that down. But my point is, no realtor, like you said, would go into an offer with that strategy without your consultation. And I think that if we can help explain to them like what deals are getting done, what people need to buy, that's where we need to go.
So, you know, Andrew, one of the number one things I hear from brokers, these are real estate brokers. Okay. These are people that are either the broker of record, a team lead, an owner. You know, it could do all the big brokers. The number one thing I hear as I travel, I'm in front of agents every week. I'll be in Los Angeles tomorrow with agents at Douglas Elliman. I'm with agents all the time. Is they say, Joel, we're losing deals we never had a shot at because the agents aren't experienced enough to hold. So a great takeaway from this call to take back to your agent partners is getting them to shut up at 100 miles an hour, and whatever they normally say to whoever they're normally talking to, their spiel when they get a referral, they should have an egg timer in front of them, okay? And it should they should hit it, and when it hits 90 seconds, if they're still talking, they failed, meaning they need to get the people to you at 100 miles an hour. They should not be attempting to overcome rate objection ever. And by the way, they're doing it because they think they know how, and we haven't shown them the light and told them we want to do it. You're not bothering us. Please get these people to us at 100 miles an hour. And if you could teach your partners that very, very, very slowly, it's huge, because these brokers, these guys that own these, they're seeing agents get 10 at bats and they're batting 0. It's not even 3, because 9 of the 10 people go, oh, the rates are too high. I can't buy right now. Oh, the prices are going to come down. So I'm going to wait for the price to come down. And instead of Andrew Marquis on the phone going, okay, would you rather pay 50 over at 3 7/8 or 15 under at 6 1/4? Let's do the math real quick. Shocker. 15 under, 6 1/4, better deal. You know what I mean? Boom. Okay, let's go. You know, these agents don't do it. They shouldn't do it. We shouldn't allow them to do it. They shouldn't want to do it. We should be doing it for them. And a lot of loan officers, they feel like it's extra work. Okay, but it's work that you're supposed to be doing. You're not just supposed to be shoving people into your automated system. The other thing Andrew and I talked about, I want to get his opinion on this a little bit. You know, I'm seeing loan officers compete against big banks and credit unions and brokers purely by using speed. They're literally having their agent partners write 9 and 10-day closes. Every single person is licked and sticked, completely docked. We throw the appraisal in. We get the contract, order the appraisal, wham, bam, let's go. They're closing. Okay, that is a very good way to overcome what I would call a predatory rate, which some of y'all are dealing with. Andrew said he's got deals and, you know, they're at 6 and it's all good to go. And suddenly someone's got some crazy 4.99 something from some credit union. And he just goes, see you later. You know what I mean? But the bottom line is speed wins. I'm telling you, those of you that have been around for a long time, it is very rare that the person with the best price has the best service. It's a very, very rare event to see that. And also the people with the best price usually don't pick up the phone on Sunday at 10 a.m. and write another pre-qual letter or do whatever you all do every day. So there are ways to combat that. And I understand you cannot combat someone being 1% lower. Okay. But I put that under what I call the lose 1, get 10, because the 2 best sales techniques are, Ed Bram, what? Unmute, are what? You get a Big Joel bobblehead if you get this right. He can't unmute.
Guilt and sympathy.
Yes, guilt and sympathy. That's exactly right. It's nothing else but guilt and sympathy. And when one of your agent partners tries to refer you someone and you don't end up with the deal because their person went off the reservation and went to Greater Bank of Idaho State of the Western U.S. for 3.99 1-year arm or whatever they're doing, great agent partners feel bad about that. And they plate the next 9 right to you. So, don't get down the doldrums. Oh, I lost another one. Nah, you didn't lose it. You never had it. Andrew, tell me about apping up front, how specific you're being, docking. Talk about that a little bit.
Yeah. So no, I mean, everything you say, Joel, I think the more time you invest with the client, the more weight the guilt and sympathy covers, right? So if you fully underwrite a loan, you have all the borrower docs, you've reviewed all the programs, they get an offer accepted. At that point, it's just a matter of telling you to move forward, and they've done everything. Are they really going to start trying to build a new relationship, upload all the docs somewhere else, ask all these quirky questions? You've got more of an investment with that.
Josh, can you mute whoever that is or mute all? Sorry, Andrew. Go ahead. Keep going.
Yeah. So I think investing that time up front, Joel, is crucial, especially in this environment. It really sinks your hook into that client that much more. And I think the quicker the close, I always say, like, order that appraisal, like get the appraisal going immediately, because once the appraiser's been out there, it's a lot harder to shift that deal over. So just
remember, everyone, your automated systems that you take apps in, that you put your people in to do their app. Everyone on this call has one, whether you're small or big, you all have one. Just tell yourself that automated system is an igloo. It is literally an igloo. Okay. It is freezing cold up in there. If you are shoving your clients into that igloo alone, basically naked, bad things will happen. They will freeze and leave usually, okay? The best loan officers in the country, if you can think about this visual, cut big windows in that igloo, and they got a coat rack as they're going in, meaning no one's in the igloo alone. There's a big window because someone's hand is reaching through and is on the client's shoulder the whole way through. Okay, that is going deep with the clients. Some loan officers think it's too much. Oh, I don't need to spend that much time. You're pretty much wrong. Yes, you do. The way we used to do it, old school, is we would sit and we'd app someone for an hour or an hour and a half and never touch the file again unless there was fraud in it. So you would say, oh, Joel, you spent an hour and a half taking a loan app. Boy, you wasted a bunch of time. And I'd say, yeah, but I never touched it again until it closed, like ever. It took me 1 second to lock it, and that was it. Okay, because I just did everything correct up front and moved on to the next one. And unless there was fraud in the file or something funky I couldn't control, or a low appraisal or something like that, I'm not touching that file again. So, a lot of loan officers have still not converted over to, doing it right up front. I'm going to allow the great Laz's question because it's a good one and it's easy. And Andrew, what Laz asked was, are you and your team doing anything different or interesting, with the exception of your corporate automated emails that pound everyone to death, from contract to close with the customer and or either of the agents? Only contract to close, not before, not after, just while they're in.
You mean like a monetary guarantee, or be more
No,
specific?
it could be that. It could be, are you sending a phone charger to the listing agent? It could be even a tchotchke little thing like that. Is there anything you're doing to glue while you got the contract is ratified, there's a close date, or right in that window? Anything special your group does with that?
Yeah, I mean, we give them great follow-up, like, all the automated stuff, Joel, which you commented on, but I wouldn't say there's any like special gifts. I mean, I've thought of the post-closing, like co-branded gift and things like that.
That's different because that's after it
Yeah,
closed.
I'm not doing any kind of real gifts in the middle of the process. It's a great idea. I mean, I think it's
so Laz, it's interesting. I'm a blessed guy and I work with a lot of top loan officers, and most people don't do much during that period. They do something. They do a lot after, and they'll do a lot before. But most people don't, do a ton there. And again, it's a great question because it begs to the conversation of, really gluing yourself to the consumer. And one of the things Andrew had said to me, we were talking privately about, having someone in and just having them walk away with some completely predatory, rate. I mean, just off the chain predatory, where you're like, here, let me carry your stuff over there for you. There's, good luck, enjoy yourself. Maybe there are some things we could do consistently during that time period to glue ourselves to them. One of the things that I've done forever, and those of you that have been in crush groups know this, is anytime I ever lost a loan when I talked to someone, I always sent a handwritten note, a lost loan note. I always sent a handwritten note. And those of you that are in crush groups, you get copies of that language. But boy, that was huge. I'd lose it. I just send a note. Dear Susie Q, thank you so much for considering me for your mortgage lending needs on your new home purchase. While I understand that you are going to be using someone else for your loan, I want to let you know that I'm still here for you, and if you need anything, I can certainly help you. Good luck, and I can't wait to talk to you again, Joel. And literally 50% of the time I get the loan back, and 50% of the time I get a referral from the closed loan after, because you can bet the other loan officer didn't do anything after closing almost 100% of the time. So Andrew, what else? It could be personal, it could be workout, it could be what time you get up in the morning. Tell people what your days look like. Give them a little motivation. Everyone, I didn't get into the, I didn't get into the, how many units you're doing and all that stuff. Just people can look that stuff up now. It's really easy. I just want everyone to know Andrew's tippy top of his game in the country for purchase units. And Andrew, talk to us about your normal day. I know you have an 8-year-old and a 10-year-old. What are you doing to get yourself motivated every day? Just a little bit of that.
Yeah, I do try to work out almost every day, Joel. So I typically get up between 5 and 6. And, the thing I've always said is like, they speak about, you get in this career and it's, you have freedom, right? You can I've always treated it like a very much a devoted job with regimens and calendars and organization and time blocking, and very much not, I don't have any calls right now. I can go, go shopping or, whatever it is. Like, I'm very on top of what I'm doing. And I think, you need to really realign your focus as to what the market is, right? Like the market isn't refinancing clearly. It's not, bidding 20% over ask. It's, hey, let's reach out to, a bunch of FHA borrowers. Let's reach out to people that couldn't buy a house before. Let's speak to what the market is and coach our referral partners to be able to find success in this market. Because another thing you said was the realtors killing the deal before they even had it. I say to them, just know enough to start the conversation. I've heard a lot of financing strategies that are below 7% and some really good ARM options that might even be in the 5s. Before COVID, these were all-time low rates, but talk to my professional, he'll give you some ideas. Because there's a lot of people that are still renting, guys, that want to own a home. And those are the people we have to help.
Yeah, it is, right now, the people doing the activities to do the following. Everyone that deals with me on the regular knows I say this all the time. Your job is not to do loans. Your job is to find people who know people who need loans, become best friends with those people, and get them to refer the people that need loans to you. Your job is to create a set of new best friends that happen to be real estate agents so they can refer you people that need loans. Your job isn't to work on them. Working on them should be the easy part. It should be assumed you know what you're doing. Your job is to get them and to deepen relationships. And I'll leave you with this. What have you done today? Okay, the Monday after Thanksgiving, everyone's in a coma still, food coma. What have you done today to deepen an existing relationship with a partner or develop a new one? Literally, what have you done? Really, what have you done today? Okay, what are you going to do tomorrow? Is it scheduled? Those of you in crush groups, I'm scheduling some of these activities for you. Okay, and we'll be doing more and more of that as we go forward. But the reality of it is what have you done? Literally, what have you done? And think about it for a minute, because most loan officers don't know what they're doing 10 minutes from now. Okay, what have you done? Andrew made a pretty profound statement with, hey, I treat this like a business. And I'll tell you, again, I'm a blessed guy. I work with some of the biggest, best loan officers in the business. They all do that. There's none of them that operate any differently than Andrew when it comes to that. This is their business. This is their craft. They're all in. They don't, Oh, I do loans, so I work out in the middle of the day from 12 to 4. Okay, that's just not how any of these people roll. They might work out for 2 hours with an agent. That might be a different story. Okay, but they're not in a gym working out for 4 hours alone just because they can. So everyone, it is 2:31. Andrew Marquis, I always love having you on. Andrew is on social media. All over the place. It's Marquis, Andrew Marquis. Andrew, if people wanted to email you, what's the best way to email you?
Andrew at marquisccm.com.
Andrew at marquisccm.com. So his last name and then Cross Country Mortgage, ccm.com. Andrew is a very nice guy and loves helping people. Thank you, Andrew. He just put that in. Better to email him than call him. He's usually a little harder to get on the phone. But thank you, everyone, for spending a half hour with us today. Those of you Crush Group people, I will see you on Friday. Excited to see you back. I know we missed last week. And for the rest of you, always great to see you. Again, this is wherever you get podcasts. You can grab this, or it is live on all social media, and you can go watch it there as well or watch it again. Everyone, thank you so much. We'll see you Friday. Andrew, thank you. I really appreciate your time.
Thanks, everyone.
Okay.
Thanks, Andrew.
Bye-bye.
Thank you.